something absolutely massive just happened that most people completely missed. While everyone's been watching stock market drama and crypto volatility, the world's most powerful nations just held a secret meeting that's about to reshape the entire global economy. And if you're not paying attention, you're going to miss one of the biggest wealth transfer opportunities of the decade. On January 12th, finance ministers from the G7 nations gathered in Washington, D.C. for an emergency meeting. Not a regular summit, an emergency meeting. And the topic wasn't inflation, wasn't interest rates, wasn't even about the banking system. They met to discuss something most people have never even heard of: rare earth elements. And here's why you should care. These obscure metals are about to become more valuable than oil ever was. Let me explain what's actually happening right now. China controls between 70 and 90% of the global supply of rare earth minerals. Not just mining them, but processing and refining them. That means almost every single piece of technology you own, from your smartphone to your car, depends on China allowing these materials to flow freely. And guess what? They just turned off the tap. In April 2025, China imposed export controls on 7 critical rare earth elements. Then in October, they added 5 more. Then they did something nobody expected. They applied what's called the Foreign Direct Product Rule. This is the nuclear option. It means even if you buy rare earths from another country, if those materials originally came from China or were processed using Chinese technology, you still need China's permission to use them. Think about that for a second. China just claimed ownership over materials that aren't even in China anymore. And it gets worse. The International Energy Agency reported that after China's restrictions kicked in, rare earth prices in Europe jumped to 6 times higher than Chinese domestic prices. 6 times overnight. Some car manufacturers in the United States and Europe literally had to shut down production lines because they couldn't get the magnets they needed. We're not talking about some minor inconvenience. We're talking about entire factories going dark. Now here's where it gets interesting for your wallet. The G7 just announced they're mobilizing $4 billion to build rare earth supply chains outside of China. They're talking about price floors, which means guaranteed minimum prices for companies producing these materials. They're discussing strategic stockpiles. They're basically rebuilding an entire industry from scratch. And the companies positioned to benefit from this are about to see money flow in like never before. Let me break down why these materials matter so much. Rare earth elements aren't actually rare in the ground. They're called rare because they're incredibly difficult and expensive to extract and process. China spent decades becoming the only country willing to do the dirty work of refining these materials. They accepted the environmental damage, they subsidized the costs, and now they own the entire supply chain. And that supply chain powers everything that matters in the modern economy. Every single electric vehicle needs about 2 to 3 kilograms of rare earth magnets. Wind turbines need even more, up to 600 kilograms per megawatt. Your iPhone has at least 8 different rare earth elements in it. F-35 fighter jets need 920 pounds of rare earth materials each. Guided missiles, radar systems, night vision goggles, all of them depend on these materials. Without rare earths, the entire transition to clean energy stops. The defense industry stops. Advanced manufacturing stops. And right now, the West has essentially zero ability to produce these materials at scale. MP Materials runs the only significant rare earth mine in the United States, at Mountain Pass in California. They're producing, but they can't process everything domestically yet. Lynas in Australia is the only other major Western producer. That's it. 2 companies trying to replace an entire Chinese industry that took 30 years to build. The supply-demand imbalance here is absolutely staggering. Now let's talk about what the smart money is doing. The U.S. Department of Defense, which recently got renamed to Department of War, just invested $400 million directly into MP Materials, making the government the largest shareholder. They also guaranteed a price floor of $110 per kilogram for MP's neodymium-praseodymium products for the next 10 years. Think about what that means. The government is literally saying, we will make sure you don't lose money because we need you to exist. MP Materials stock has already surged over 160% in the past year. But here's the thing, this isn't speculation anymore. This is national security. The company has a deal with Apple to supply magnets made entirely from recycled materials. They're building a massive new facility they're calling the 10X facility, which will produce enough magnets for 5 million electric vehicles. The Department of War has already agreed to buy 100% of the output from that facility. Meanwhile, Lynas Rare Earths in Australia just signed a partnership with Korea to build magnet manufacturing facilities. They're expanding their Mount Weld mine, which has some of the richest rare earth deposits in the world. Australia and the U.S. just signed a critical minerals framework committing over $3 billion in the next 6 months alone. These aren't small companies taking risks. These are governments treating this like a war mobilization. And it literally is a war mobilization. China made it clear in their latest export restrictions that any company affiliated with foreign militaries will be denied export licenses. They specifically said applications for military use will be automatically rejected. They're trying to cut off the entire Western defense industry from accessing these materials. That's an economic weapon, and the West is scrambling to respond. Now here's where the opportunity gets really interesting. Most investors are looking at this wrong. They're thinking, oh, MP and Lynas are expensive, I'll wait for a pullback. But they're missing the bigger picture. This isn't about normal market cycles. This is about governments rewriting the rules of global trade. When a U.S. government guarantees your revenue for a decade, when they become your largest customer and your largest shareholder, you're not a normal company anymore. You're part of the strategic infrastructure. Let me give you some context on the numbers. MP Materials is trading at about 20 times forward sales right now. Lynas is trading around 19 times forward sales. Compare that to the broader materials sector trading at 5 times sales. So yes, these stocks look expensive by traditional metrics. But traditional metrics don't apply when you have government backing, guaranteed demand, and a competitor that just got banned from selling to half the world. The analysts are projecting MP Materials revenue to grow 83% in 2026. Not 8%, 83%. And that's probably conservative because it doesn't fully account for what happens when China's export pause expires in November 2026. Right now, China agreed to suspend some of their restrictions for 1 year as part of trade negotiations. But does anyone seriously think those restrictions aren't coming back? And when they do, prices are going to spike even harder. Here's what you need to understand about rare earth pricing. It's not like oil where there's a global market price. Each rare earth element trades in very thin markets with huge price swings. When China restricted exports in April 2025, some prices jumped 600% in Europe. That's not a typo. 600%. And that was just from restricting 7 elements. They've now restricted 12, and they're threatening to restrict even more. The VanEck Rare Earth and Strategic Metals ETF, ticker REMX, gives you diversified exposure to this entire sector. It holds MP Materials, Lynas, and about 27 other companies in the space. The expense ratio is 0, 58%, which is reasonable for a specialized sector fund. If you don't want to pick individual stocks, This is a smart way to get exposure. The ETF has already doubled in the past year, but again, we're still in the early innings of this trend. Some people are also looking at smaller players like American Resources Corporation, which trades under ticker AREC. They're developing technology to extract rare earths from recycled materials and coal waste. The stock has surged over 150% in 6 months. USA Rare Earth is building a processing facility in Texas. Energy Fuels is developing heavy rare earth production in Utah. These are much riskier plays, much smaller companies, but they have significant upside if they can execute. The key thing to understand is that this isn't just about one or two stocks. This is about an entire supply chain being built from scratch with government support. Mining companies, processing companies, magnet manufacturers, recycling companies, they're all going to benefit. The question is which ones can actually deliver. Here's what I'm watching. First, production numbers. Can these companies actually scale up production on the timeline they're promising? MP Materials hit record production in Q3 2025, producing 721 metric tons of neodymium praseodymium oxide, up 51% year over year. That's real progress. Lynas completed their major expansion projects and is ramping up capacity. These are tangible results, not just promises. Second, I'm watching the licensing approvals. Even with the current suspension of some Chinese export controls, companies still need licenses to export certain materials. How quickly are those licenses getting approved? Are there bottlenecks? This tells you how serious the governments are about actually solving this problem versus just talking about it. Third, follow the money. Where are the next big government investments going? The U.S. just announced they're amending the Defense Production Act to designate critical minerals as essential. That means they can invoke wartime production authorities if needed. Canada is doing the same thing. The European Union is talking about joint strategic reserves and bulk purchasing agreements. When you see that level of coordination, you know this is real. Fourth, watch what China does. Their current suspension of export restrictions expires in November 2026. What happens as that deadline approaches? Do they extend it, or do they tighten controls even further? My bet is they tighten, because their entire strategy is to maintain dominance in this sector. Every month that goes by, Western companies are getting stronger and more independent. China has an incentive to act before the West builds too much capacity. Now let me address the risks, because there are real risks here. First, these are mining and processing companies, which means they're capital intensive with long development timelines. Things can go wrong. Environmental permits can get delayed. Construction costs can overrun. Technical problems can emerge that MP Materials is still losing money right now because they're investing so heavily in expansion. They expect to return to profitability in Q4 2025 and 2026, but that's not guaranteed. Second, prices are volatile. If China floods the market with cheap rare earths to kill Western competitors, prices could crash. This is exactly what they did in the 2010s when other countries tried to build rare earth industries. They dropped prices so low that most projects went bankrupt. The difference this time is government support and guaranteed pricing, but it's still a risk. Third, technology could change. What if someone invents motors that don't need rare earth magnets? What if substitutes are found? This is a long-term risk, but it's real. The companies most at risk are those betting everything on one material or one application. How should you actually play this? Here's my framework. If you want conservative exposure, buy the REMX ETF and dollar cost average into it over the next 6 to 12 months. This gives you diversification and reduces timing risk. If you want more aggressive exposure and you can handle volatility, consider building a position in MP materials and Lynas Rare Earths, maybe 60% MP and 40% Lynas. These are the two clear leaders with government backing and actual production. If you want high risk, high reward plays, look at the smaller companies, but keep that to maybe 10 or 15% of your rare earths allocation. And don't put more than 5 to 10% of your total portfolio into this sector, no matter how excited you get. This is still a concentrated bet on a specific thesis. Diversification matters. Here's the bottom line. The world is fragmenting into competing economic blocs, the US, Europe, and their allies on one side, China and its partners on the other. Rare earth elements sit at the intersection of this fragmentation. They're critical for technology, critical for defense, critical for clean energy. And right now, one side controls the supply, while the other side controls the demand and has much deeper pockets. The next 5 to 10 years are going to see a massive build-out of non-Chinese rare earth supply chains. We're talking hundreds of billions of dollars in investment. The companies positioned to capture that investment are going to see extraordinary growth. This is one of those rare moments where government policy, technological necessity, and geopolitical competition all align to create a multi-year investment theme. Most people are going to miss this. They're going to keep watching tech stocks and AI hype while the real money flows into boring stuff like mining equipment and processing facilities. But that's where generational wealth gets built. Not in the exciting stories everyone's talking about, but in the critical infrastructure that makes everything else possible. The G7 meeting on January 12th wasn't just another policy discussion. It was a declaration that the West is serious about breaking China's monopoly on critical materials. They're putting real money behind it. They're changing laws to support it. They're treating it as a national security priority. And for investors who understand what's happening, this is a once-in-a-decade opportunity to position yourself ahead of a major secular trend. So ask yourself, do you want to be early to this, or do you want to read about it in 5 years when everyone already knows the story? The window to get in at reasonable prices is closing. Not because these stocks are going to moon tomorrow, but because the fundamental supply-demand dynamics are shifting in a way that can't be reversed. China isn't going to give up control voluntarily. The West isn't going to accept dependence forever. Something has to give. And when it does, the companies in the middle of that shift are going to be extremely valuable. Don't let this opportunity pass you by. The rare earth war has begun, and it's going to reshape everything from your iPhone to your investment portfolio. The question is whether you're going to be positioned to profit from it.